You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Mike, the situation in Greece, is that why the stock market has downturned?
Well, I don't think so, actually. I think the market, the market actually made a peak in May. At least the S&P 500 and the Dow did. The NASDAQ managed to make a little bit of a high in June and then just topped out too. But we were falling before this weekend's Greece thing. And more significantly, though, is that even though the market averages seem to be okay, and the NASDAQ did make a new high last month, most of the stocks that make up the market on the New York Stock Exchange and S&P 500 and NASDAQ were actually performing very poorly. The percentage of stocks above their 200-day moving averages, for example, took a sharp tumble before this week. What that means is the internals of the market were very, very weak. And the last time they did this, before the market had a correction, was back in September. The market made a peak in the middle of that month, and these internal indicators took a real nosedive, just like they did going into this week. And then, of course, we saw the market take a bit of a tumble in October. Now, as far as the market action goes, I'd like to point out two things. One is we bounced on the S&P 500 twice above the long-term moving averages. The Dow fell through it and bounced above it. But if you look at a chart, you can see the averages are trying to hold up at that level. Now, if you go and look back to October, the same exact thing happened. The market averages tried to hold that level for about a week, and then they went through them. It fell for, I think it was about 5 days straight, a little bit of a drop that everyone's forgotten about that, but what was happening, it was really scaring people on the television. So much, in fact, that Steve Leach, the news economics reporter, made a statement of reassurance that he talked to people at the Federal Reserve, and the market continued to decline like that and scare people that the Fed would print more money within a couple months, another quantitative easing program. So that's how scared people were just from that drop. And we haven't even seen a drop like that here. You know, what we've seen, though, is everything that led up to that last drop. And I think that means that all of us can expect to see the market continue lower over the next couple weeks. Maybe it can bounce tomorrow, you know, or sometime the week after or something. But overall, I think if people don't like losing money in the stock market, they could get out on these bounces a little bit, raise some cash. And I've been saying with you the past couple months that to raise a cash reserve, to raise one, 10% in cash and put some money in gold. And anyone who's done that, they've got some cash reserves. And you know, if they didn't do it before, now's the time to do it. I think before we tumble even more.
Well, a lot of people have been predicting that the big correction is going to happen in the fall, like it does when you have a market that's at its maturity.
I think that makes sense to me. I think such predictions have probably come to fruition. As far as the Greece thing, I've followed it fairly closely. Because back in 2012, I actually bought Greece and some of the stocks of Greece, and it was a nice trade. I got out of it, though, last year. And this year, it's been more in the news than it was back then, even. And what's fascinating to me is everybody knows that as far as that IMF bailout went, it's gone now, but as far as it went, that Greece was never going to recover and have a sustainable economic growth where it ever pay off those debts. Ever. And the bailout of 2012 failed. We all know that. And we saw, you know, this left-wing party come in office and promised to try to renegotiate and make a bailout deal that would work. I don't like communists or socialists, but these people were really trying to do something to help the people of Greece. And it's the only thing anyone could rationally do if they were a leader of that country, was to try to create a new bailout that could work and abandon the one that had no chance of working. So they went on a political campaign to do this, and it was clear, I think, about 2 weeks ago that no deal was ever going to be made. And this weekend, they went into a default process. Now, what's funny to me about this is yesterday morning and this morning on CNBC, there are claims that Greece could make another bailout deal, that they're trying to negotiate another one, and the stock market gapped up on that news, and even Bloomberg this morning was saying it was possible to make a deal. But it's not possible. It's over. And anyone who knows anything, following it, knows that. It's just like an unreality of reporting these stories about Greece. And it's not just the reporting, it's the American stock trader who's gone crazy. The Greek stock market was completely shut down Monday, and there's this Grek ETF, which, like I was saying, I had bought it before. Well, when their market was closed, it crashed 16% Monday, and people in the United States were buying it yesterday and today based on these crazy headlines that are never going to come true. And that leads to a trade. I haven't done this trade, but anyone could do it. The Grek ETF went up a whole lot today in Europe. They even shut down trading in it too. And it's going to crash back down because there's not going to be a bailout. Anyone could bet against these crazy traders trading on the New York Stock Exchange's thing. You know, I'm not saying buy options because you make it pay too much on the volatility premiums. I don't really know what they're trading at. People would have to look into that, but I think someone could short it. It makes the money. If it's up tomorrow, I might do that myself because no deal is going to happen. I mean, it would be nice if there could be one, but the IMF has sentenced that country to economic death, basically, and that's just the way it is.
We'll have more with Mike Swanson right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mike Swanson from WallStreetWindow.com. Mike, riots in the streets of Athens. People can see the economic crisis. You can't get money out of the bank. How are you supposed to survive on $60 a day? And as someone said, have a family of 5. You try supporting 5 people on $60 a day, you're going to go nuts. And in some cases, the ATMs are out of money anyway because the banks are closed. How can people deal with, day-to-day business there?
Well, the good thing, if you can call it that, is that I know a few people that actually live over there, and they never believed that this was just going to turn out, or I should put it this way, they thought the odds that this would turn out well were very low. So what they've told me is they know lots of people that have withdrawn money from their bank account in months going into this. And I think most people over there probably have any substantial amount of money in there. I mean, they've had since January really to do that. I wonder, I don't really understand, and I wonder, even if everyone withdraw their money from the bank account, you still got to have, businesses still have to write checks, and pay people, and I don't know, what kind of stabilization effect this will have. And then even worse is the inflation that will come, if they go through a complete default and, create another currency or who knows what, and they'll get hit for a year or so with lots of inflation. But at this point, in the long run, there's no other way to get out of this. And we've seen this in other countries. Mexico went through this in the 1990s, Argentina around 1998, and even last year it was coming out of a debt crisis. Turkey's done this several times. So these things happen. People find ways to survive. They barter, they tighten their belt, and do what they have to do. And eventually things do improve and get better. I mean, you can't have a society with 25% unemployment, which is what Greece has been at for the past couple of years, and have any sort of political stability or social cohesion. So something had to be done to improve that, and the Europeans and IMF were never going to allow the Greek economy to improve. They were just wanted to do another bailout to keep this going for as long as they could, so they could extract as much out of the Greek people as they can. You know, when they talk about they want reforms, what the IMF does with the reform is it tells a nation, sell your utility companies, your water companies, telecommunication companies, any sort of thing you can to our private businesses for pennies on the dollar, and that's called reform. And they say that's how you can pay some of these debts off. That's what the IMF did to the old Soviet Union when it went under, and that's what helped create these oligarchs. And they did that to countries in Latin America in the 80s and stuff. And, you know, this IMF, World Bank, is not they're not nice people. And, I mean, that's what reason you get these leaders like Chavez come up, and that's why the Greek people now do live under a very left-wing government. It is partly a reaction to these policies that have brought them to this point, but things will eventually get better, you know. As far as like the stock markets, though, I really think the actual impact has been very minimum. I mean, we've seen the market, it did fall Monday on this news. The Dow fell 350 points, and, you know, we've seen these gap ups yesterday and today, you know, associated with headlines of a bailout, which isn't going to happen. But even if you took away that news of Greece, I think the market probably would have fallen anyway, or was headed for a drop. And it seems kind of to me that a lot of times when you look at the trends in the market and you have a decline, usually, you know, it was basically in the position to drop anyway, and somehow, you know, this news of some sort that's bad comes out that, you know, seems to be an explanation for it, or it's a coincidence, or whatever. Even 9/11, when the stock market was closed and gapped down, it was already dropping into 9/11. We've been in a bear market since 2000, and we had a summer rally in August of 2001. That summer rally was done, and the market was dropping 2 or 3 weeks into 9/11, and then, you know, it just fell even more. And people associate that drop with 9/11, but it was a bear market anyway. So it's almost best sometimes not to pay attention to the news, especially nowadays when it's very unreliable, or it's not even real. At least that's how I feel about what we've seen this week when they report on this Greece situation, because it's just pretty much over.
The Chinese stock markets have had some pretty dramatic drops over the last few days.
Oh,
they
man.
probably wouldn't be reacting to Greece, would they?
No, it's just a bursting bubble. That's a wild situation. I mean, their market fell. It's already down 20% off of its high, but, you know, it went up parabolic from about November to the peak the other month. It's almost like looking at the chart of the NASDAQ in 2000, and they even lowered interest rates a couple of days ago to try to stop it from falling, and it just kept falling anyway, which is what happens when a real bear market gets going. Cutting interest rates don't matter anymore, and I think that's all this stuff is the warning to us, I think, that when the next bear market comes, just don't think, well, they'll cut rates or they'll do something. In fact, there's a funny headline about China last week, and one of these days that the market was down, it was on Bloomberg, and it said that the Chinese people, they're interviewing people, and they said that their stock market's different because the government is heavily involved in it, so it could go back up. You know, that's what they were saying. And what's funny about that is these are Chinese people living under communism, but, you know, when our stock market drops, we tend to say the same thing. In fact, that's what they said before, back in October, that our government will help. That's what Steve Weissman said. And I think in the big picture that we're headed for a bear market. We're topping out and then actually in the process of rolling over. And, you know, we're testing these long-term moving averages, and we drop below them like we did last October, which I think is pretty much certain to happen at some point next month, or this month, I should say, as it's July the 1st. But I think we'll see Steve Leisman get on TV or some Fed official say, well, we're not going to raise rates like we thought we would in September. And, if it falls even more, they'll say, well, we're considering now we may do another quantitative easing program. And if it falls more, they'll say, well, now we're really considering it. And all that kind of talk, just the first talk that we're going to push out raising rates will be enough to cause the final turnaround and start of the next gold bull market. It's just sitting there right now. Gold's at around $11.70 an ounce. The trading range for gold just getting narrower and narrower. And support's $11.50 and resistance is around $12.05. And once we close about that $12.05 level, I think it's just really going to be up from there for 2 to 5 years to go, because we're going to be in a bear cycle and more money printing will be the consequences. And bonds aren't, the bonds are actually acting weaker than the U.S. stock market this year. If you use relative strength plot comparing the price action in both, bonds aren't doing well relative to the stock market. Opposite was the case in 2007 and 2008. Bonds outperformed the stock market, went up when the stock market fell. Did the same thing in 2000. Not this time. Bonds are already acting weaker. Well, if people really start to say these stock things aren't working out the way I thought, and they're not saying that yet, it'll take lower prices for people to do that. This week's Investors Intelligence survey showed that 49% of people are bullish on the stock market. Last week it was 51%. So that drop Monday didn't really scare anybody. So you got to ask yourself, how much lower do we got to go before people really get worried? And who knows I can't answer that, but this week wasn't obviously enough. But at some point, in the past, people would move money out of stocks and put them in their bonds or CDs, but who's going to go to the bank and say, I want to put $5,000 in a CD and have their money frozen up for a couple of years and get absolutely nothing in return? That's not what people do. And this once gold breaks above 12.05, it starts making 10% every couple of months, or it just went up 10% a year. Those people, when they make those thoughts about where am I going to put my money, they'll be putting into gold. They'll be putting into something that is going up. And in the next cycle, for most people, the only thing that they'll know is going up is gold. I do think there'll be some other stock markets outside. Russia can go up. Even Greece eventually can go into a bull market. That's the funny thing about how bad it is if you look at these default situations, usually a bottom in a new bull market actually start a couple months after a country goes bankrupt. So there actually is still down the road, I think, an opportunity in Greece, but those are kind of exotic things for the average person to even think about doing. But gold, silver, precious metals, I think that's something the man in the street can understand and have faith in. It's real. The government can't print it. They can't take it away from you either. They can't really tax it. That's why TV tells you to hate it, but it's real, and it's why I'm saying again, everyone should have 10% of their money in gold and silver, 10% in a cash reserve so they can buy at cheaper prices. Just do those two things, and you can come out okay. If you want to do more, try to make more money, then look into ETFs, and I think mining stocks, they'll do good too, and there's things we can all be doing, but it's time to do something, because sitting there and just saying, which is what most people are doing right now. Actually, most people really aren't doing anything. They just got their statements and stuff they bought over the past couple of years, and they've seen it go up, and they're very happy about that, and they don't think they have anything to worry about. That's why Investors Intelligence says 49% of the people are bullish. But they get a 15, 20% loss, and then they'll wake up and realize that they need to make some changes. Well, I'd rather have people make changes now, and not later, after they lost money. Now's the time to do it. And that's what's on my mind. Forget about Greece. Think about your own money.
Yeah, Greece can cook in its own juices, I guess.
Yeah. Well, the crazy thing about it is I see I kind of stopped watching CNBC, but there's this Fox business channel show on, and it doesn't have as many viewers, but their message is kind of like, these people in Greece deserve what they got. They're socialists, and it's because they got so much social spending and this and that. Well, the United States, we got to get to GDP that's crossed over the 100% mark too. So, I mean, we're headed for that same trap. Maybe it's too late, to make changes, but if we simply don't try, that's where we're heading for ourselves. So. Yes,
well, as long as you insist on making trillion-dollar aircraft carriers and so on when you don't need them.
Yeah, I mean, it's a big problem. I mean, the food stamps program is, I think, it's $30 to $50 billion somewhere in there. I think it's 30. It's just speaking off the top of my head, but the NSA spying is $50 billion, and they got budgeted $1 trillion to build that F-22 fighter jet. $1 trillion. It's a lot of pork barrel spending, and they don't seem to be able to stop it. So we're just like Greece, except I guess the difference is their government doesn't make people pay taxes very well. It doesn't keep track of stuff like that.
Well, in Greece, cash always has been king, yes.
Yeah, that's right. That's right.
Mike, thanks a lot for chatting with us.
Thank you. It's good talking with you as always.
My guest has been Mike Swanson from wallstreetwindow.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.